MontesDeOca with the VCPMI early morning update for December 30th, 2020. Let's move right into the Ticket Talker live trading room here and take a look at the gold market. Trading last at 1890.150, up 870. The market has entered into the sell 1 to sell 2 level for the day, and has activated by trading above the daily average of 1883 and the weekly average of 1885, a bullish uptrend with the initial daily target of 1891 to 1898 with a weekly target of 1910. Let me see the Bollinger Band. It's telling us the market pretty much validating that the market has entered in a distribution area of supply. And if you were long, if you've been long, these are the levels where you may want to lock in some profits. And so you have some choices here. The bigger picture is that we're looking at the weekly target of 1910 to be our focus of this trade, since we have a pretty much harmonic relationship. We've had a harmonic relationship between the daily and the weekly here since we started this week. So the momentum that unfolded here is pretty much a bullish price momentum, with the market coming down to 1875.60 yesterday, not quite coming down to that level of the main daily of 1875 to 1867. But found buyers earlier. Just following the VCPMI, the probability model that we have here, we seem to be entering into potentially what could be an acceleration into that 1910. The market is overbought, and so you can manage your short-term trades accordingly here, and based on where the market is, obviously activating a weekly now bullish price momentum supported by a daily. We've decided to pretty much get net long on the market here. We recommended our subscribers earlier this morning pretty much to hedge, to cover the hedge that if they had a hedge or any position that was hedging the long side of the market, as I feel that the momentum as we move into the end of this year seems to be looking to challenge that 1910 level. From a day trading point of view, the market is setting up for a short-term trigger a close below 1891 at 715 would be such a trigger. And then it's a question of, how you want to manage your risk based on your profile. What we're seeing here is a little bit of resistance unfolding here at these levels. So let's watch the market here for the next few minutes and see what the gold market wants to do here. We're taking a look at the robot in TradeStation here. And I'm trying to get into the silver market here. You can see the silver market also is in a bullish trend momentum. And the target for the silver is 2670.71 on this bullish trend momentum. This green bar here pretty much validated the level of the average to be 2693 to pretty much activate the bullish trend momentum by coming down, testing it, and then closing above it and closing through all of this trend line resistance that you see. But even though the market is a little bit overbought here, according to Bollinger, the upper end of the band, the market target, nevertheless, on the code is at 2670. Let's take a look at the derivatives like Nugget. Dust is one of the instruments that we use to hedge, and we suggested to unload this hedge pretty much and allow for the other side of the market, the core position that we have, which is the long side of the market, to continue to build the equity. What I'm finding here, I'll tell you as a trader, is that these corrections that we're looking at are short-lived. And so, trying to get short this market has never been proven, you might say, unless you act quickly, that profitable on a swing, because the market generally switches the trend overnight on the Globex. And then when it opens up here in New York, like you see, it opens up in a huge gap. And the trend shifts, and the prices obviously are much, much higher on the gap. So what we're looking at is the momentum here seems to be very bullish for silver, very bullish for the metals. Even though we might be entering into this area of resistance, sell 1, sell 2, we're looking at the target, the upper end of the target, 1898, 1899 to be completed. We got about 4 minutes to see what the momentum of the market is, and by closing pretty much above 1891, it's activating 1898. It's activating a bullish signal. The thing that I want to point out to you is that as a trader here, when you're day trading the market, I recommend, and I take myself when I trade the highest probability trades, and that's obviously when the market reaches the extremes above or below the mean. In this case, the 1891. So my preferred trade would be to go short with the probabilities on my side, is that if the signal is activated, even though it can be negated when activated, which nothing is a guarantee, it gives you the other probability side of the coin. And that is that if you go short, you're looking at a 90% probability in your favor if the signal is activated, but there is still, if you're buying, that 10% probability that the market can still go up to 1898, up to that 95% probability, which is the relative implied volatility to the mean. The sell one level from 1891 to the average price daily of 1883 is about 50-90% relative implied volatility. The sell two level to the mean is 50-95% relative implied volatility to the mean. And what that means is that, mathematically speaking, unless the market is overwhelmed by the amount of demand underneath that will absorb this probability factor that is saying that this is where you can potentially find supply in the market. And so depending upon the demand in the market to absorb that supply that's being offered, it's going to be reflected in the price, and it can get through this resistance level all the way up to 1910. Once we get through 1898, the daily signals go neutral. They completed the patterns, the targets are completed, and then we pretty much hold on to the weekly signal, which is a bullish uptrend with a target of 1910. It looks like we activated a short trigger. We're going to take this short signal here, short at 1889.70, and my stop is going to be 1891 on a close above. I want to take a shot at this signal here, but I will place a close stop above 1891 on a close above it. I will get out immediately on a close above it. The market, even though it's a bit of a bought up here, even though the Bollinger Band indicates the market a bit of a bought, it can continue to get more overbought if we trade above this level of 91. And again, the weekly magnet is looking at 1910 from the average price of 1885, which activated the bullish trend momentum. And so for the weekly average, or for the weekly signal, it would be the protector level would be a close below 1885. It's a bit of a contrarian signal here, going short again against the weekly, but if you manage the risk closely, and in this case 1891, I'm willing to risk that level and hold on to my long-term position, my core position, which is long. And I'm using the futures obviously here to day trade the market, to short-term trade the market and generate some liquidity. My long-term buy is still up. So I'm not going to be, missing anything here, even if the market does take off on the upside, because I know my risk short term in the futures, and I'm also managing my overall position, which is my core position net long the market. And this is how I'm using the VCPMI, basically, not only to day trade the market short term, or to look for short term opportunities, but basically to build a long term core position in precious metals. As pretty much I think the fundamentals are dictating that we're headed for much higher prices based on the amount of stimulus that the collapse of the economy is demanding here. But that's the fundamental side of the market, and that's a different discussion. What we're looking at right now is what the market wants to do, what it's telling us to do based on the daily data that the VCPMI is able to provide us, and it provides us daily, weekly, and monthly data. Provides annual data and also cyclical data. And we use the 9-year cycle basically to identify the long-term aspect of the market. Let me take a look at the bigger picture here for a minute and see where we are in relation to the bigger picture here. And what you see here, first of all, is that we've had this whole month the average price of 1840 as the monthly average. And the market never really quite was able to come down to that level. We came down to a low of 1860, 1868, 1860, 90 was the low, made on around December 23rd. And from 1860, we rallied all the way up to about 1904. Not quite into that monthly sell one target of 1913. So here we are again, 1913 is the monthly target. And we're looking at the weekly target of 1910. And so you can see where the harmonic relationship is now, connecting the weekly and the monthly. And so the 1910, 1913 area is going to be a very defining area in terms of the bigger picture, in the price of gold from a probability model. If you take a look at the fundamentals that we're dealing with right now, it supports pretty much a rise in the price of gold to those levels, just based on the amount of stimulus that is going to be coming into the market. And as a trader, pretty much what I look for is the reaction of the market based on the fundamentals, particularly into these levels here. I look to trade the extreme levels above or below the mean. And the VCPMI tells me daily, weekly, and monthly where those levels are. So you as a self-directed trader can manage the data accordingly, according to your profile, according to how you trade the market. If you're just a day trader, then you can just take the day trading signals. But if you're looking to trade and build, that is a concept that I apply in using the weekly and the monthly levels, as well as the annual and the cyclical levels. So 1910, coming back to 1910, is a pretty critical level. And I think if we get through this resistance of 1891, which I'm trading against to see, if I get stopped out, it's fine. It validates that we're going to run up to 98 and obviously above 98, 1910. So let's see how far the market gives us the opportunity to make this a day trade. Sometimes what you want to look for is validation, and sometimes stopping you out of a position is validating that the market wants to go the other way. And so, you want to be prepared for that if that is the case. But in the meantime, if not, then we can counter trend or counter trade that specific trend. You can trade around your position. You can, scalp it. You can swing it. You can position it. It's not one-dimensional. So here we're beginning to see a little bit of buying coming in. The market was not experiencing large supplies, you might say, that so far has taken the market lower than this recent low that we saw here on this bar. And unless it closes above 1891 to negate this signal, it's going to be staying short. So the daily signal is counter trending against the bullish weekly uptrend. A little more supply is coming in. And sometimes the futures contracts can move differently than the derivatives based on its own volatility. So here, for example, if you're starting to get a reasonable profit, the only time that I would suggest to use a stop would be by using a trailing stop. And that's when the position begins to move in your favor in a reasonable amount that you can lock in a profit or lock in at least a break even, giving the market a little bit of room or the position a little bit of room to move, to breathe. If the market comes down on the signal down to 85, I more than likely probably it's my first target, so I'm going to see what it does when it gets there, if it gets there, because that would be activating the weekly average. It's a pretty quiet holiday week. The volume is going to get even slower as we move into here the next day or two. And so it makes it a bit more difficult, obviously, because of the lack of liquidity to day trade sometimes. But I wanted to take this signal and just follow one way or another. It will validate what I need as a trader to know, and that is the kind of supply, you might say, that's above the market here between the 1891 and 1898, and also the kind of demand that's underneath that may or may not take that supply out, depending upon how anxious these buyers are to bid the market up. Not much going on here today. Slowly drifting back and forth. And that goes for the equity markets as well. So it's end of the year volume quieting down. Here, as the market is building a bit of an equity on the day trade, you may want to lower your trailing stop to your break-even point at 1889.70. If it runs up above it, you can stop out at break-even. And as the market begins to move in your direction for the day trade, which can be all the way down to 1885, you can trail it with a stop. If you have a single contract, I look for about a $300 day trade profit. And that suffices for me, my day trade goal. And depending upon how the multiples I have, then I can decide at that point what to do. But $300 is my target initially. Quietly drifting into support. The one market that is on fire, obviously, is Bitcoin. The high that was made on the Grayscale Bitcoin Trust, which is the instrument that we trade when we trade Bitcoin, made a high of 33.57, and it's pretty much at record levels here. And we're watching this price development up here with the expectation that the market is overbought, and hopefully and ideally we would like to buy the market on a test into this uptrend line here that we have, which comes down into that 21, 22 area. Very volatile market, but it's great for short-term trading. The low back in March was at $5, and we're looking last at the high made 33.34. That's an incredible gain. And it has entered, you might say, into some kind of competition as a tradable asset with the gold market, because the gold market hasn't gone up, that much, even though we got up to a high of 2089. We went into a consolidation while Bitcoin just exploded. So I still believe the gold market needs to correct itself to the fundamentals that we're dealing with right now. And I think when we catch a bid, we're going to be looking at, 21, 2200 in gold into the first quarter of 2021. So that's about a $300 rally expected from pretty much the levels that I believe are going to be the annual lows of 1767, which is what I've been pointing out here for the last few weeks, that this level potentially, unless tested, is going to be the low for the year. And that seems to be where we headed. In terms of establishing that 1767 is the low for the year. So if you can use this number and calculate now, assuming that this is the low for the year, you're looking at the market obviously challenging the highs of 2089, to say the least, but it's got to get through this resistance that we're looking at. And I use the VCPMI to identify for me those levels and connect those levels daily, weekly, and monthly. So we're at a crossroad, so to speak, as you can see here, with the Fibonacci trend line resistance levels that identify the trend lines of the market here. And we have a slew of indicators coming together here. We have the daily, we have the weekly, we have the Bollinger Bands. We have several indicators that are giving us a obviously complete picture in terms of the price in relation to these indicators. We have a Fibonacci retracement. And as you can see here, the vortex, so to speak, of this configuration, it's indicating it's breaking out of this Fibonacci trendline resistance, and it points that the next level is 1934. If it does close above it for the week, and you're looking at 1890, 91. This is where we are right now on the code today. So in order for this target of 1938 to be completed, the market's got to go through this resistance that you see here, or this area of distribution of supply. Otherwise, the lower end, you might say, of this trend line is all the way down to about 1834. If we look at the monthly so far, which is going to end and change, and probably, excuse me, as we come into next month, it's going to be higher. We may be looking at 1850, 1860 as the next major level where the code is identifying potentially buyers to be identified. So we're kind of in the middle of the road, as you can see. And for me, I'm comfortable where I am on the core long position. But, if I get a chance to trade the market short term, that's pretty much what I'm doing here and what I'm showing you how to do. We're going to have the numbers posted for us in terms of what we've been able to do this year. And I will share that with you when they're completed, but it's showing some phenomenal results in real account. I've been trading live now for about 250 episodes. That's 250 hours of live trading. And during that time, I've been able to document that we pulled out in excess of $1 million out of the market in real dollars. So this is what I'm able to do as a trader, and I'm sharing with you all these signals that I executed were actually executed in the room, just like you see here. So I think what we do here is completely transparent. Thanks to Ticket Talker and this incredible technology that we're able to do this. And it's up to you whether you're a simulated trader or you want to follow me on the simulated platform here, which I use for coach and teaching, or you want to execute the signals. I'm doing it in real time. I'm executing this information. In a real account. So there are many different ways that you can use this or apply this indicator. Again, depending upon your profile, you can use it as a GPS to guide your trading for day trading, or for swing or position trading. Whether you're an individual account, a pension fund, an institutional account, a retail account, this is like a GPS that you use to identify for you where you want to go when you want to trade, depending upon what you want to trade. And you can apply it to pretty much just any instrument that has the criteria, which is the volatility, to be able to generate these algorithms, generate the signals. So I make a point of showing transparently on this live trading room here exactly how I'm applying the intelligence in what markets pretty much I'm doing it in. So it's pretty transparent. One of the things that I do as a trader is that I limit, pretty much my exposure. Even though I track all these markets and watch, I only trade about 3 or 4. Um, as an individual trader. If I'm automating it, I can trade, every market available if I want to take that risk. But what I've learned here to share this with you as an individual trader is that the intelligence, although it's um, you might say one-dimensional in its application, what it has done for me, it has given me tremendous flexibility to manage the risk in different forms and different instruments that are within this sector, you might say, that I'm interested in, which is in precious metals. There are thousands of instruments underneath that you can trade. Stocks, shares, 2-to-1 velocity, 3-to-1 velocity, again, depending upon how you want to manage your risk. Nugget is a favorite of ours that we use. It's a 2-to-1 ETF to gold mining shares. It's a miner, and it's an aggressive ETF. And we buy it to reduce our margin exposure when we pretty much get out of our futures position. Then we monitor the derivatives underneath that provides tremendous opportunity. So I'm going to go flat here on this trade because the market is validating that pretty much the momentum is up. We found buyers here. So I lost $20, and now I'm going to hold on to my net long position and continue to build the equity. So this covered my short trade. I'm net long. I'm net long on my core position in the market. And I'm going to stay net long. I cover my dust hedge. I recommended all my traders in my private trading room to do the same. Market is showing a lot of resilience as we are moving into the end of the year. This is what I look for, is pretty much for the market to validate it, and the way that it validates or negates is simply by looking at the volume, looking at the bar, looking at the color, and when you get a green bar against 3 red bars, that's a pretty good indication that the buyers took out all that supply. And if we run up against the high that we made here now recently above 91.50, it is going to put into perspective again the bullish uptrend that we are trading right now, which is in the weekly. The weekly Price momentum is bullish. The target is 1910. I think the path of least resistance here is to stay long the market and be prepared to add into these levels of support if we do get a correction. If not, this market can really take off all the way up to 1938, and you don't want to miss that move. So, if you're looking to build long term, use these corrections all the way down into 1860 to add. And if the market explodes to the upside, use the 1938 level as a target. Very quiet day, very slow again, holiday volume. And, we take whatever the market gives us here. But I think we've had a phenomenal year, and we're pretty much comfortable where we are at this point, letting the market just wind down into the end of the year. Derivatives are bullish. They're on the green. The metals, the gold mining shares, derivatives. Yeah, Nugget is up 150, up 2.19%. JNUG is up almost 3%, up 3.45. GDX is up 36, up 1%. So this is a broad rally that is supported by the derivatives as well. And we have the XAU up 264, 1.85%. So we have the aggregates supporting the uptrend. And I think the path of least resistance here, my friends, is for you to stay long. Be prepared to buy any corrections into that level of 1860 if given the opportunity. And hold on to your target that we're looking at of 1910 to 1938. In the meantime, my friends, thank you again for the courtesy and the privilege of your time. And I hope that every time that you come here, you are becoming a much better trader. Please take care of yourself here. I'll talk to you next time. Be well.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform